Roger Altman joins us this morning, Evercore founder and senior chairman, also former deputy secretary of the Treasury. Roger, happy Friday. It's good to see you.
Hey, Carl.
What do you think is the main narrative right now? We've got sort of these issues regarding data center spend, obviously tariffs top of mind, and we're waiting for the tax part. But what's driving your conversations?
I think you can summarize it really in one word: uncertainty. And uncertainty is always difficult for consumers, for businesses, and for investors. And why is there that uncertainty? Because there's been a blizzard of policy actions from the new administration. Tariffs have been threatened, delayed, canceled, enacted. You see remarkably wide and deep announcements on spending cuts, in particular things like the National Institute of Health and National Science Foundation, which are very central to innovation and business. And it's causing, as I said, a lot of uncertainty. Now, look, this may be a good political strategy. I'm not sure, but it's not a good economic strategy. You know, the value of equities has fallen $4 trillion in the past month, and the measures of consumer confidence, and Rick Santelli was just talking about this, are notably down. Pretty obvious that business confidence also is down, and that's what's going on. And so it's no surprise that markets are pulling back, and it's no surprise that consumers are pulling back, because uncertainty always has that effect, especially this amount of it.
Right. But, I mean, we've heard anecdotal evidence of consumers pulling back and maybe CapEx and M&A activity softening. But when do you expect it to be ratified by actual data?
Pretty soon, I think. I mean, I think there's pretty strong evidence that the consumer is hesitating. You see that in the most recent retail sales data. You see that to some degree in this morning's data. You see that in comments from Walmart to others who serve the consumer in a very big way. So I would expect direct evidence of that to come forth pretty soon. After all, most economists have marked down their forecasts, including for this first quarter, pretty meaningfully. I mean, at Evercore ISI, we're projecting 1% real growth for this quarter. That's about half of what most people were projecting 2 or 3 months ago. And, you know, you see the Atlanta Fed growth tracker actually at some points pointing negative for the full year, although I don't think that's yet evident. But I expect this data to be evident quite soon, because it naturally applies with the delay. You know, the data that's being reported now is by definition backward looking, but it'll be evident pretty soon. Certainly markets expect that.
You know, another expectation, Roger, and it's David, coming into the year was certainly that we'd see a lot of M&A. You're an old hand at that. You've advised on some of the largest deals that have taken place in the last 20 years. What is the conversation like right now with your clients? Is there a willingness to consider stuff? Are they perhaps somewhat hesitant for any of the reasons that you just outlined?
It's really hard to say what this year is ultimately going to look like. It has not gotten off to the type of start in terms of M&A volume that was so widely expected and so indicated by the share prices of the major participants in it. And at the same time, David, backlogs are high. Measures like engagement letters and conflict checks are high, but announcements are not high. So it's hard to tell where this is going, but I think it does come back again to uncertainty, and in particular, that equities are weak. I mean, what you usually want to see in terms of M&A volume being high are rising equity prices, good business conditions, and solid levels of CEO confidence. And right now, those are under pressure.